Hold on 1 second. Hold on 1 second. Let me connect my good wires. We've got a lot to talk about, okay? We've got a lot to talk about. This is kind of insane. Hold on, let me connect the right wires. Boom, 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 boom. Is this here? Okay, let me know if that's good. That should be good. Should be able to hear me. All right, we've got a big one, guys. Today is today's kind of crazy. Okay, I'm gonna be here for a while today because we're gonna go through this together. This is one of those moments where we kind of got to go through this. This is bad. 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 This is insanely bad. So we got Silicon Valley Bank, which is a stock that is down 92%. It was down 80% today, and it was down 60%. Bro, I've never seen a stock down 60% in the pre-market ever. I'm like, wait, a stock can be down 60% in the pre-market. I'm just putting all this on Twitter. I'm gonna see if I can get Sachin on this live real quick. Hold on, we're gonna get through it. There's Sachin. If you want to come on live real quick, DMing you the streamer link. This is crazy, guys. This is crazy. This is absolutely insane. This is bonkers. This is bananas. Now, does this mean the entire stock market is going to crash? I don't know. But it does look like it's pretty bad. All right, here we go. Let's open up Webull. First, let me see the comments real quick. One sec. Let me open up Webull, and then we're going to get into the comments. So Silicon Valley Bank, this is a stock that has collapsed, okay? And because it has collapsed, we are now wondering if everything in the stock market is going to collapse, because this might be the domino. This might be the Lehman. This might be the Enron of our generation. Now, I don't think it's Enron. I don't think it's like a scam. There's a little bit more nuance to why this company is crashing that I'm going to get into, because I've been researching this all last night. But we're going to get into it. So it's halted right now. As you can see, there's a halt. It was $763 in October 2021. That's not the case anymore. If you had puts on this bad boy yesterday, those puts have absolutely printed like ridiculous, or if you were shorting it. And now it is crashing deeply. This was a stock that was about somewhere along the lines of around 300 yesterday, 312 yesterday. Yeah, 312 last week. And now it is $32 from what I'm seeing on Robinhood. We're going to get Sachin on. Okay, perfect. Sachin's going to be on. He's going to be able to explain this to us. So Sachin's going to be great because he's going to explain this. All right, so what's happening? Let's talk about it. This is my understanding of what's happening. First, the comments. Power Napster, Sethi Roth, Uriel, CJ, Bay Ray, Philip, Gabe, Ray, Jason, Tesla pre-market slightly green. That's true. It ended at 168 yesterday. Ray, Star Buccaneers, Miyoko, Pete, Ty Gordon, Vincent, Stevie, Felicia, Eeyore was right. Hello. Thank you for all being here. Mitchell, Quicks. That's a dope last name, Quicks. Philip Rozo. All right. So here's the basic understanding of what's happening. Okay. Silicon Valley Bank is different from other banks. It's not like Bank of America, not like JP Morgan Chase, because this is a bank that is in Silicon Valley. Now, if you don't know what Silicon Valley is culturally in the United States, it's in California. And some of the biggest startups in the world, startups that aren't really public companies yet, but that have raised hundreds of millions of dollars, they bank with Silicon Valley Bank because the loans that Silicon Valley Bank, SIVB, ticker symbol, gives is just more favorable than what like JP Morgan would give, because they're more understanding of startups and the grind and founders and equity and investing in shares. A bunch of companies incorporate and immediately bank with them, all that stuff. I have a startup and we bank at the good old fucking Bank of America because I'm a patriot. No, not really. It's because Bank of America is the bank I've been using for 6 years. So that's why I have no allegiance towards Bank of America. But I bank with Bank of America. I didn't even know Silicon Valley Bank was a thing like a year ago. And I was just like, okay, whatever. It's Silicon Valley Bank. But I bank with Bank of America. So I don't have to worry about that. But obviously Bank of America's loans terms and all that stuff is not that good. Now, this is what happened. in 2021, the VC market was going insane, right? The funding was going insane. And I know this because my company couldn't get funded by these VCs, but like BS, like actual BS crypto companies were raising hundreds of millions of dollars, right? So obviously priorities were mixed. What happened in 2021 is Silicon Valley Bank got all this money deposited. I think it was like $60 billion or something from what I was reading, from crypto companies and from overvalued startups that like didn't deserve to have hundreds of millions of dollars, but they were able to raise $100 million, right? Now they need to know what to do with that money. They needed a return on the money. They started buying mortgage-backed securities. Those mortgage-backed securities started to go to shit as interest rates rose. They had to ultimately sell those mortgage-backed securities over the past couple of months. They took a $2.5 billion loss. And as a result of that, they now needed liquidity as soon as the word got out to clients that the company took a $2.5 billion loss and they needed to raise money because they don't have liquidity. They started taking their money out of the bank because why would you keep your money in a bank that's trying to raise liquidity? And then there was a bank run, which compounds on itself because more and more people take their money out of a bank. The way the bank works is if there's no money, they can't make any money because their whole business is loaning out money and making interest on that money. And then the bank collapses. And now there are reports that they are trying to sell themselves because they couldn't raise money over the past few hours. Finn Zola, what's up? Erwin Takor, what's up? Yeah, this is kind of crazy. About 100. Oh, they had 120 billion, not 60. Okay, so I read 60 billion. All banks are in the same situation. They have to buy bonds that have been losing money. Yeah, and it's just like Silicon Valley Bank had way too much money. And obviously there's a lot even more to this situation, and we'll get into it. People are comparing this to Enron, but I don't think Silicon Valley Bank necessarily was like frauding. I think they just made bad financial decisions. From my understanding, Enron was like legitimately engaging in frauds. I may be wrong on this because I don't understand that story completely the same way. But this is insane. This is absolutely insane. Let's go on Twitter. Let's see some stuff that's going on. Now, the entire market was affected yesterday when this happened, right? We had the entire market kind of crash. There was a moment where I was just sitting and I just looked at my phone and I saw my like total worth in Robinhood drop by 5%. I'm like, that's pretty bad. What happened? And then I saw the Silicon Valley news. Palantir's at 756. It's down 1.6% pre-market. S&P at 390. So we finally got down from the 400 range. We were at 400, but now we're at 390. Didn't Enron cook the books? Yes. And I don't think Silicon Valley cooked the books. I think they just messed up where they allocated their capital within those books. It's so annoying because I bought some Tesla at 190. My mom bought some Tesla at 189. And it's like, this always happens. 172. Nonetheless, this might be so by the way, SoFi is under 6. Now I think SoFi is getting hit really badly because it's a bank, and it's at 590. It was at 584 pre-market. I think SoFi is a bit differentiated from just a regular bank, and so I actually like it being this low. Let's see if we can get even lower than this. But I will be very excited if we can get Tesla at 150, Palantir under 7, and SoFi under 6, which SoFi is already under 6. Let's see if we can go lower. If this can happen, I will be incredibly, incredibly excited. So, I mean, if Silicon Valley Bank has to be the needle in the haystack that crashes the market so that we can finally get some buying prices, I'm not gonna complain. I'm not gonna complain. SoFi does not deserve this. I would imagine all banks are getting absolutely destroyed right now as a result of a lot of this stuff happening. Let me pull up a couple of other things. Let's go here. This is just fascinating though, man. Like we kind of needed a catalyst. It's funny because I think I was even talking the other day of like, what is that thing that's going to happen? And it's like, now that thing seems to be happening. And who knew that it was going to be this? All right, we have a very special guest that was gracious enough to join me today. He's going to explain a lot of the stuff that's happening. He was also here during 2008, and he was trading, and a lot of different stuff happened. So if you all can please welcome to the Morning Open, Sachin. Thank you for being here, sir.
Hey, Amit, how are you doing, man?
1 second, Sachin. I have to adjust my sound. Okay, good. I can hear you. Awesome.
Okay. Can you hear me well now?
I can hear you well. Now, before I let you talk, because I know you're going to explain everything, we have 45 seconds till market open. So I'm going to just wait 45 seconds, and we are going to open the market together. You're going to be able to open it with me today, so this is awesome. But just in these 45 seconds, I want your one-word reaction to what has happened since yesterday with Silicon Valley Bank.
I think the counterparty risk is the biggest concern because people don't know like if this contagion has to spread. I mean, if it is only SVB, I mean, people might be able to do it. The challenge at this point is how many other banks are doing it, especially the regional banks. The big banks will always be bailed out and they'll have better strategies, but regional banks are the main concern.
All right. It is 9:30 a.m., March 10th, 2023. Silicon Valley Bank is still halted. We'll keep monitoring this as Sachin is talking. The stock market is now open. Okay, things are relatively red. Again, Silicon Valley Bank still halted. We'll keep an eye on this one. Nothing too crazy. All right, Sachin, let's get into this. So you are someone I would say is not only a really strong person in understanding stocks, but you're a historian of the stock market, which is why you've been able to kind of do well in the market. So I guess the first question I have for you is, from your perspective, how did this happen, and how can a company like Silicon Valley Bank be down 92%? How is it possible for a stock to just collapse like this and investors to lose all faith in the company itself?
I think we need to roll back like 2-3 years, especially at the boom of like the venture capital and private equity. The challenge was that the bank has got a lot of money, a lot of investments were coming in. Okay, and the banks were under pressure to generate the yields. And I think this is where all the MBS that the SVB has bought, especially like the one which is hold to maturity, that is coming. So the problem what has happened is that they had a lot of assets which is not liquid. Okay, that has created the panic situation. The another challenge is that as market is being dried up, I think everybody is looking for cash, so there has been withdrawals.
Let me ask you one quick
Okay.
question. Why were they
Yeah.
buying mortgage-backed securities? Why weren't they just buying stocks? Like, why didn't they just put all that money into public equities or even startups? Why MBS? Why was that the best asset they wanted?
See, internally how they do it, it's complicated, but banks has to work within a given framework. Okay, having said that, like within that given framework, like what they can do, where they can invest, the challenge comes is that they still have to do some financial engineering within that. I think in this particular case, the MBS were sold to them. Okay, and a lot of things happen on a relationship basis. Okay, they clearly underestimated the risk of hold to maturity. They also underestimated the risk of liquidity going forward. I think the challenge, see, they have good assets. I mean, I will not say that the bank is completely screwed in a way. I think their challenge at this point is liquidity. Okay, and in this market it is very difficult to raise capital, because if you raise capital, that capital will immediately be used by people to withdraw. So basically capital coming to bank is very difficult. So what I expect at this particular point, if there is no bailout, that the it's very unlikely that the stock will be continue trading for this week or next week. Okay, it will be halted.
Really? You think it's going to be halted for the next week?
There is a chance, because if you see their book value, my understanding is that the current market cap is below their book value. So at this particular point, it is a fair thing to find that how good the book value is. Okay, if the book value is reasonable, okay, a lot of people who masters distress investing like Bill Ackman and all, they would try to jump in, maybe Warren Buffett, but these people will only jump in when they know from their insiders that there is a deal in place and there is somebody going to bail it out. Okay, another scenario is that someone comes in and completely acquire the bank and the book and everything. Okay, there are a lot of reasons to do that also. First is that it could be also a fintech at times. I mean, right now fintechs are struggling for cash by themselves, so I hope they will not come at this time, because it allows you to have a banking license. So there are several industries which wants banking license. Okay, if you take the case of India, like in Bharat Pay, they were the only fintech to get the banking license for a very simple reason, because they acquired a bank in distress.
Right.
So there are a lot of people who would be interested in banking license. Okay, they could come and take it, but they need to raise the money for that. Okay, if the stock is being allowed to trade at this particular point, it will keep collapsing until and unless there is a statement made from government or feds or someone about it, because company has made it very clear that they have failed to raise the capital.
Okay, so now here's my question. Why do you think they have failed to raise the capital? Why aren't, like, if I'm a VC fund, like Sequoia, Andreessen Horowitz. This bank, I think people don't realize, has been fundamental in the startup community because of the types of loans they give, the types of deals they make with founders. Like, my startup works with Bank of America, but we don't get anything special from them. Silicon Valley gives things that are very special to founders. So why wouldn't a VC fund try to save the bank, potentially buy out the bank, and then, have all the assets? Because eventually, if the startup community survives in the next decade, the bank theoretically should survive.
So there are three reasons for that, Amit. First is that VC banks don't have mandate to buy assets in distress. Their mandate is to invest in early stage, high risk. Okay. The second is that if you inject money or capital in the bank, there is no guarantee that that capital will not be withdrawn, because currently it is when you have panic about a bank, you don't care about anything. You just want your money out. I mean, why would you keep your money in Silicon Valley Bank if you could move it to JP Morgan or Merrill Lynch? That's a simple question. Okay. Nobody takes risk on the bank. You can go and take all kind of risk in finance, but bank is something you never take a risk on. The third part is that the venture funds and financial institutions are already in trouble for last 2-3 years in this scenario, that they have already lost a lot of money. Okay, the question is, when the deals are cheap in market, you put capital, what's your mandate is, why you go and buy a bank. So the way these things are normally done is that normally a consortium of people and companies come together. Okay, like we saw in the case of long-term capital management in 1998. Okay, at that particular time in long-term capital management, actually there were only two banks that decided not to participate. That was Bear Stearns and Lehman Brothers. Okay, it was, and by coincidence or by design, these were the two banks that were allowed to go underwater. Okay, so it's a very cult kind of a culture. So if people will come together, everyone will come, and unless no one will come.
Okay, so another question for you. I was talking to our good friend Chris Patel last night. He called me and I was talking to him, and he said JP Morgan, Goldman, they are all probably acting like vultures right now, and they are getting ready to attack and potentially buy out.
I agree with Chris on that. I mean, see, there are no emotions in this business. You have to be ruthless. Okay, we saw what happens between Binance and FTX. I mean, FTX was doomed, but Binance has showed that it dooms very fast and in a very bad way. Okay, so if there is, and again, I mean, these MBS that they are holding, somebody has sold them. Okay, and if they are not able to liquidate, that means there is a counterparty on the other side as well. Okay, the counterparty can go and say, okay, I can give you 60 cents on a dollar. But that kind of offer hasn't come yet.
Now, I want to ask this question. Why were interest rates being high the reason they had to sell the mortgage-backed securities and take the $2.5 billion loss? Like, what is the correlation between that?
I think the correlation is actually, as much I understand, is, see, normally what happens is that you will have the relationship between bond and equity. That means if equity is not doing well, bond will generally do well.
Yeah.
In this particular case, you can have risk-free returns from treasuries, so bond is also beaten. So anyone who has money in bond, I mean, it's already on a relative disadvantage relative to treasury. So at the end of the day, they have a lot of these structured instruments and bonds on their balance sheet which are not doing well. I think it's a critical risk.
Okay, so if you are, I guess, an executive at Silicon Valley Bank, and you're seeing Jerome Powell basically say from probably 8 months ago that inflation's bad and we're going to maintain rates, and you start to believe him, and you have some pull in the company, do you start to say to the other executives, hey, this might get bad for us. Why aren't we doing, like, is this corporate mismanagement? Is this Enron? Is this Lehman? What exactly is, or is this a fluke that just happened and that's it? What would you compare?
See, I mean, it's actually, it's neither of them. I mean, I don't know how would I have behaved if I would have worked for bank. I probably would have behaved like the herd the banks does. I mean, I wouldn't be any different. The challenge is that you need to understand how people deploy fiduciary duty. The first thing they ask is what everybody else is doing.
Yep.
Okay. Another thing is, if something has worked for you, you need to have a very strong reason to move away from that. That means you need to be proactive. These people are not from that category. So most of the time, by the time they act, it's already too late. Okay, so even if somebody goes them and explain a scenario that this could happen, probably they wouldn't have done anything. They said, nah, I don't think it's happening. Okay, like I mean, look at us. Like if you go back to 2021 and somebody tells you that Palantir is going to under $6 or Tesla is going to $100, I mean, how many of us would believe on that, and how many of us would act on that?
Right.
Okay, so even with the, I mean, in the hindsight, we can say a lot of things could have been done, but I doubt. My worry is that if they are under this kind of a stress, there are probably few other banks of regional nature under the same issue.
Okay, now I had a tweet this morning, and I want to break this down. Is this the catalyst that is similar to what happened in 2008? I know you said it's not exactly
No,
like
it's
Lehman,
not.
but
No, it's
is
not.
this something that could crack the market and we get S&P to 3,000? Like,
See, see, in 2007, the biggest problem was that people have no clue what their counterparty risk was. So there was a lot of distrust.
what do you
That
mean by
means JP
counterparty risk?
Morgan didn't know what is the risk Goldman Sachs is carrying on their books.
Right.
Okay, so there was a, so the problem that time was the counterparty risk. The counterparty, that's why that particular time the liquidity dried up. When we call about financial, I mean, there was a literal collapse of financial system. People were not trading with each other. Everybody was holding their musical chair, and that's where the issue was happening. If anyone is exposed, they are gone. So that's not the case at this particular point. That's one. The second is that was also, but it doesn't mean that the overall economic crisis cannot be bigger than GFC. I mean, there is, you can never say never. Okay,
Yeah.
you have things happening in the crypto market. Okay, you have things happening. You saw that even the EV boom and a lot of other companies are struggling. Okay, we know that the interest rate are still going to go high. The unemployment has to go down further. And to be fair, I mean, I have never seen the bunch of clown that are sitting in Congress in ever in my life in both parties. I mean, not Dems or, I mean, so at this particular point, there are, I mean, almost several catalysts are present that can trigger a larger crisis. Okay, there's geopolitical issues that is going on that is not being handled. There's election on the line. Okay, I mean, the cultural war in US has gone out of proportion. There are a lot of things that are on table. So you can say there's a lot of gunpowder, and you don't know what will spark that, but I doubt this is the spark.
So you ultimately think this is just something that happened. It's unfortunate, but it's not this underlying catalyst within the infrastructure of the economy that destroys everything the way it is right now. There's other things that could do that.
See, one of the problem that banks have done is, see, generally in a high interest rate environments, banks should be able to make easy money. But since banks have not seen interest rates for a long time, I think their exposure to overall treasury is not that high.
Right.
And that
Right.
is why one of, I mean, ideally, like if you can lend money at a high interest rate, I mean, you should be doing well.
Right.
So that is the challenge I think banks are facing at this particular point. And my understanding is like the big banks like JP Morgan and Goldman Sachs, I mean these are like vultures. They'll go and they will find whatever easy money they can get in the market.
This is interesting. I think no one expected this random collapse to kind of happen yesterday of one of these biggest banks. It also, to me, it was just like, well, this is kind of the VCs created this problem as much as it sucks, right? Because they overfunded startups at such a high level, obviously FTX, Sequoia, all this stuff. And when founders raise this much money, they need to do something with it. And if they're going to get really nice interest rates or loans from Silicon Valley Bank, they're going to give it to them. And then if the bank, has way too much money, they have a fiduciary duty to do things like buy mortgage-backed securities. But in a bad interest rate environment, that stuff might fail.
See, I mean,
Okay.
in theory, it all works, but in practice, it doesn't. I mean, practice, it's a very greedy situation. Okay, and the only time you know about it when you are in a crisis like this. I think there has been quite a fall in the market. Palantir is at 7.37.
Yeah, I was
I'm
just about to
reading
ask you about that. I don't think you'll be on the weekly tonight because I know you're busy. But what are your thoughts quickly on Palantir and some of the price movement we've seen over the past couple of days?
See, I think we have discussed this before that, I mean, at this level is definitely cheap. There is no doubt about that. And we also saw and we discussed like, I think when it went to the levels of 10.3 and all that, that it can go with a macro news up to that level, but in these macro, it's very difficult to hold. So
Right.
my understanding is still that we will be bouncing between the range of 7 to 10 for long time. And of course, there will be sometime peaks above 10 and sometime troughs below 7. Okay, so my strategy is very simple. I mean, I'm just trying to play as many options as possible. Uh, I do covered calls. I do a lot of cash secured puts. I mean, I'm already short a lot of contracts yesterday. Actually, my timing was pretty bad. I just shorted before the collapse. I thought, okay, it looks like, but I mean, it's okay. I mean, most of my strike price is at 7 and 7.5. So I just have to sit it around for 10-15 days.
Got it. All right. Thank you so much, Sachin. Means a lot for you coming on in short notice and breaking this all down for us. Super awesome. I have his Twitter linked in the chat. So everyone, please give him a follow on Twitter. Lots of great financial news, and you guys can check him out there.
Hey, thanks, man. Really
Thank
appreciate
you, Sachin. Appreciate it.
Okay, bye.
Bye. Okay. So for those that missed kind of the recap of what Sachin was saying, Silicon Valley Bank, in a nutshell, got way too much money in 2021, about 120 billion, because startups were overfunded. This is a bank that primarily works with startups. The boom cycle of 2021 means they had too much money. They had to do something with that money. They invested in mortgage-backed securities. Mortgage-backed securities fell massively over the past couple of months since interest rates went high. No one expected interest rates to go high, or else they would have sold off those mortgage-backed securities. And they had to sell them off yesterday, took a $2.5 billion loss. They need to raise liquidity. They had a bank run because people realized they're going to take their bank out of Silicon Valley Bank if that bank needs to raise money. And as a result of that, all of that money now, the entire bank is collapsing because banks don't make money unless there is money. And they needed to raise money. They can't raise money. So now they're looking to sell themselves, which is basically the situation that is going on right now. Is this the biggest question I wanted to know from Sachin is this a Lehman moment? And it doesn't look like this is a Lehman moment necessarily. It looks like it's just a bank that collapsed. It's not a bank that is the underlying infrastructure of the American economy, is, engaging in fraud, or, they're cooking the books. It's just an unfortunate thing that happened, but it might not be the thing that destroys everything else, or destroys the entire economy. Good stuff. This is more informative than ChatGPT. Thank you, Chris. I appreciate that. Thanks for the recap. It is a Lehman moment, but it is messed up. Yes. And again, thank you, Sachin, for joining. Looks like a tough 2 to 3 weeks unless there's clarity on current contagion. Please make sure to follow him. I have him pinned at the top of the chat. So please make sure to check him. Please make sure to check him out on the on Twitter. Okay, so let's see what else we have. Bought Tesla at 169.69. Probably will go lower. Yeah, it did close there yesterday. That was pretty hilarious. We're gonna open back into the greater market and see what's going on. Obviously, we have stocks that are down today, but it's like there's a sea of red. Wow, Tesla 168. So there we go. Tesla's down. Nvidia, that was a little. We just had a little drop. Nvidia was just at 234 when Sachin came on. It's at 227. That was a little bit of a drop. That's a little. There. AI 21. AI is down 5%. Whoever has puts on AI, that's going down a bit. Bitcoin, wow. Nasdaq is down 154 points. This was at 11.5 yesterday. Yeah, this must have crashed yesterday as well when everything was crashing. Ginkgo at 119. Duolingo 117, Neo 849, AMD 81, Microsoft 248. Microsoft was at 275. Bing just announced they have 100 million daily active users using Bing. So still not enough for the market to get excited about it. Where's Netflix? We haven't looked at Netflix in a minute. Where's this? There we go, Netflix. I said 2 weeks ago that I should be buying puts at 360, but I was too much of a you-know-what to do it because I get scared sometimes. I'm a little scaredy cat when I get scared of mice, and I get scared of buying puts. And Netflix has obviously collapsed. Now, granted, the market, it could have went up, so that's the problem with buying it. There was nothing technical about why I was going to buy puts. I was just like, I don't like Netflix's business model. I want to buy puts on it. So Netflix has seemingly collapsed a little bit. Let's go to the 3 months on it. Yes, he was at 379. Like at 379, it didn't seem like it deserved to be at 379. This is one I should have bought puts because this is the only company I actually don't like in their business model. Even though I like You, season 4 is out. I like You. That's a great show, but there's some of these stocks that should have been down. SoFi down 7.8%. Let's get SoFi down even more. I got the notification that Palantir is down 4.9%, 7.32. Let's get SoFi down under 5. Let's get it back down under 5. It's a bank. I don't think it has all the risks that banks have right now, but it's probably going to be perceived as it does, which is good for us as long-term shareholders because we get it low. Bank of America down 4.04%. We have JP Morgan down 0.48%. We have Wells Fargo down 2.39%. So top 3 biggest banks, not crazy declines, but some declines for sure. Tech is obviously down. S&P below 390 finally. We got that there. Let's see how far it can go down. Palantir dropping. SoFi's in the nuts. Yes. If there's no liquidity, how are banks making money year over year? Well, in general, right? Banks are putting their assets, their cash in different yielding assets. And the problem is a lot of them didn't have exposure to treasury yields. But also they get to give out high interest rates, right? So even if there's not strong levels of liquidity in the market, if they get to sell you a mortgage at 7%, that's, it's not the worst thing in the world for banks. So, I mean, they adjust in different ways, but it's just a question of how many people are trusting them and which banks are being trusted. Like Bank of America is very unlikely to die, right? It's like, that's the bank I use. It's just like, it's Bank of America, JP Morgan Chase. These are really, so that's when, if Bank of America were to collapse, that's when shit hits the fan. That's when this is 2008, because then it's like, wait a second, those are trillions of American dollars that are just collapsing. SoFi weekly tonight. I got lots of thoughts about this. Big implications for SoFi. Yeah, this is going to be interesting. It's going to be very interesting. I'm curious to hear about the other guys' perspectives on what this means for banks. And we'll see. Most banks don't hold the mortgage. They resell the mortgage to Freddie, Fannie. That also makes sense. Shout out to Ashish. Thanks for being here. And so, again, for banks being able to sell the mortgage and just collect some of the spread, that is also a good thing for banks. Looks like I'm going to own a lot of Bank of America after today. Bank of America is a big Warren Buffett stock. Being down 3% means Buffett's, I'm not sure what Buffett's average is, but theoretically down some billions today on Bank of America. It's one of those stocks that has always stayed strong. Do they give a dividend? They give a dividend, right? No, they barely have it. Well, they have, no, yeah, they do. 2.98%. So about 3% dividend of Bank of America. Nvidia's down. Tesla 171 making a little bit of recovery. All right, let's take a look at some of the mainstream news and see what their thoughts are on some of the Silicon Valley Bank. Also, the U.S. economy added 311,000 jobs in February. That's not good. I mean, that's good, but it's like Buffett will only buy if they give a dividend. That is true. 311,000 jobs is probably not what the Fed wants to see, I would imagine. All right, let's go to this one. Silicon Valley Bank may cause the Feds to start cutting some rates. Let's see some thoughts on, I don't think this would happen, but let's see some thoughts on why it could happen. I'll pull up FRC in a sec.
Larry McDonald is the founder of the Bear Traps report. And Larry, look, I don't want to spark additional concern more than is necessary over this. This may be a case where a lot of people are selling now, asking question later. But I think what's probably happening here is people are looking at these hold to maturity situations where you have assets, particularly in bonds. You say you're not going to mark them down. You don't have to under accounting rules, but even though bond prices have come under such pressure this year, if you're going to hold them to maturity, it's not a problem. If your borrowers force you to cash in on those things earlier because they want their money back, it does become a problem. It's a problem for a small bank like SVB. Is it an issue for some of these bigger banks too?
Well, you're doing a great job kind of giving important color on the situation. I've been listening this morning. So the larger banking systems, so think of the XLF, those banks have about 15.5 trillion of assets in the XLF, whereas the KRE is about 5.5 trillion. So the regional banks are smaller, but picture in your mind the credit risk management team and the interest rate risk management team at, say, JP Morgan or one of these big banks in New York. This is like, the team that's flying the F-16, right? Whereas if you think about the interest rate risk teams at the regional banks across the country, you might think of an overweight man or woman coming out of a Dunkin' Donuts. You're talking about a team of people across the regional bank system in the United States that haven't had to deal with interest rate risk for literally their entire careers, okay? You're talking about interest rate risk and credit risk, especially interest rate risk, that hasn't existed. So they really don't have the risk management hedging practices that
Essentially, what he was saying is Silicon Valley Bank doesn't have to do the things that traditional banks have to do in terms of hedging and managing risk. And so that's why, they could fall with this mortgage-backed security stuff, because traditional banks just didn't have to deal with all that. Even though they have way more assets under management, they're a little bit more smarter with what they do with their money. All right, FRC down 50%. This is the First Republic Bank of San Francisco. I've never heard of this bank. But it is down 50% today. As you can see, here's the collapse right there. Apparently Cramer tweeted about FRC. Let's go to his tweet right now. Let me pull it up. Jim Cramer. He tweeted, this is crazy, bro. It's crazy. Oh my God, I got to quote tweet this. Oh, I got to show you guys this. So he tweeted FRC is the new focus. It's a good bank. 33 minutes ago, he tweeted this, guys. 33 minutes ago. Oh my goodness. I'm quote tweeting this right now. Oh my goodness. Oh my goodness. This is insane. This man is a prophet. It's just crazy how many times he's able to get this done. Let me show you guys this on Twitter. Wow. Wow, 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 wow. All right. Jim Cramer. This is hilarious. So FRC is the new focus. Very good bank. Well, why is FRC collapsing? Like, what is going on now? FRC. So let me look up FRC a little bit. Let's actually look up what this is. FRC Bank. What is this bank? FRC Bank. First Republic Bank. So let's go to their website right here. Share this tab instead. Can you see it? Yeah, you guys can see it. First Republic Bank. Our mission is to impact the lives of thousands of children. Requires a trusted. Blah, 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 blah. They are based in San Francisco. What were their results? Okay, let's see their fourth quarter results. Can you see this stuff? Yes, you can see this. Revenue was $5.9 billion, up 16%. Net interest was $4.8 billion, up. So that's amazing. That's not bad. Net income was $1.7 billion, 12%. Book value per share was $75, up 10%. Quarterly earnings, revenues up 5% up to last quarter. So, I mean, like, not a crazy growth, but a nice little dividend. But it seems like their allocation was also not as strong as some of the other banks. It was in a little bit of a city situation, like Silicon Valley Bank's allocations. Kramer's covering his ass now on CNBC. Oh my goodness, this is insane. Yeah, so I want to let me do some more digging on FRC and why this is happening. FRC stock. Let's see. Wow. So both of these are in San Francisco, which is one of the main things that's interesting to me. It's like if they both work with startups, that also might be the reason that other companies are taking their money outside of FRC and they're putting it into bigger banks. I mean, this is very good for bigger banks like Bank of America, JP Morgan. I mean, they must be getting a ton of deposits just now. Signature Bank, SBNY is down 21%. FRC is down 31%. Silicon Valley down 60%. Wow. This is a lot. This is a lot. and if this gets halted soon, then we've got a bunch of other banks that are going to be halted. It's a WordPress bank website. Wow, this is crazy. All right, let's look at this. Let's go to YouTube and take another look at some of this other stuff that's going on. Okay, let's hear a little bit more about SIVB and how it's a classic run on the bank. Get a little bit more context on that.
Peter Orszag is here. He's the CEO of Financial Advisory at Lazard. He's also the former director of the Office of Management and Budget under President Obama. And Peter, it's an interesting morning. A lot of things we're trying to dig through. Can you offer any help or any insight to kind of point us in the right direction? What do you take out of this SVB situation?
Well, I actually think it is potentially dangerous. So a couple of points. First, let's just look at the direct impact. The most likely direct impact is just on the tech community itself, which has been battered by valuation. But a lot of these companies have relied on this particular bank for liquidity. They'll have to go elsewhere and expect some dislocation from that. But the big question, as you were just discussing, is what more than that. And I point to just two things. One is the core issue here, Becky, as you had pointed out, is there are a bunch of assets that have not really been marked to market. And that is a broader phenomenon where when interest rates go up, these bonds that are held and available for sale or held to maturity, the value of them go down. They're not immediately recorded as such, depending on which category in particular. But that is a broader phenomenon because that is not specific to Silicon Valley Bank. And so that's one question. And the other question just involves confidence, a variety of different, the underpinnings of the financial system fundamentally depends on confidence. Waking up to seeing problems at a well-known bank in a particular community doesn't help from that perspective.
All right, let me ask you this. The idea of not marking things to market properly and not being forced to do that by accounting standards. I was wondering this morning, and I'm a little reluctant to say this on air, but is hold to maturity, HTM, the new CDO? Obviously, the banks are better capitalized all the way across the board, but especially the big banks at this point. But that what you're saying kind of keys me back to that question. How big of a deal is this?
Well, how big of a deal it is depends a little bit on how long interest rates remain high, because that's what's driving this disjuncture between, or the change in the valuation of those bonds. And that brings us back to the inflation dynamic. But this is one reason, by the way, why I've been saying for a while that I wish the Fed would tilt towards pausing and seeing how things play out. I think it's better to do that than to keep raising and then be forced into reversing your position quickly as you try to clean up a mess that results from it.
Peter,
This is a lot. Weren't people giving SoFi crap for holding to sale and not maturity? Yep, that is exactly what was happening. And that's why Becky was asking, is that kind of the situation that's going on here? SoFi seems to be navigating this in a pretty interesting way. I know the stock is down, and we'll get to that in a second. But I don't know. I think SoFi has done better than some of the other banks in navigating what could have been bad. I mean, they didn't have tons of mortgage-backed securities that they had on their list. Now, I did make some comments about SoFi last night that were a little bit interesting, and I'll let you guys decide in the chat what you think about my comments. Overall, I stand by the comments regardless. I've only heard one good argument against it, but this is my thoughts on SoFi. So maybe a bit of an unpopular take for the SoFi community, but suing the Biden administration was pretty ridiculous. If you don't know, SoFi sued the Biden administration to allow student loans to start being paid and not delayed. In a time of potential massive recession, suing to make people pay their loans, no one cares that your students are rich and can afford it. The average FICO score of a SoFi borrower is about 160. So, they can definitely afford to pay back their loans to SoFi. It's just a horrible look. Now, the reason I say this is for twofold. Number one, SoFi already gave guidance for full year 2023, and they said loans would have relatively little impact. And if they were lying, then that's bad. But I'm assuming they're not lying because it's all out there in terms of numbers, and investors were pretty happy with their earnings and 2023 guidance. In fact, they said they might be GAAP profitable by the end of the year. They all but guarantee that they're going to be GAAP profitable. So if that's the case, and student loan revenue has such little impact on literally the profitability of your company for the first time in history, I don't know why you are suing the administration to get loans to come in. Because of the second reason, it makes you look like a dick. Like there was a whole pandemic. People have to chalk up $300-400 a month is not going to be that easy. And obviously the philosophical argument is like people should pay back their loans. I get that. I'm not saying this as like some socialist. My argument is that in this time, to create a bank that has a positive brand of get your money right and we're here to support you and no overdraft fees because we want to support you and we don't, we're against the big guys, and then you're suing to make people pay $400 a month. Like, they will have to pay it eventually. Let it happen on its own. Don't be the thing that has to sue the government to make it happen. Let Biden eventually allow it, or let the next president eventually allow it. By the way, I think if Trump was elected, he absolutely would have delayed student loans just like Biden, because you think he wants to be the guy forcing people that cannot afford to pay $400 a month to start paying $400 a month? Like, no. So in my opinion, it was just a horrible look from a brand perspective. And you don't need that revenue. If they needed to make profitability or revenue growth, student loans, I would never have bought the stock. because I'm not in the business of buying a student loan refinancer. That's not why I bought SoFi. I bought SoFi for a lot of other reasons. So it seems really weird for them to care that much about it. And I guess we'll talk about it today on SoFi Weekly, but to me, it didn't make any sense. Politicians immediately took it to a morality argument. That is true. That is true. If it's SoFi's money, they loaned it should be paid back. I agree. It should be paid back. I just think the way they're going to get it back, it's already been 3 years. Like, what's another 6-7 months, especially when you guided in your earnings to not get loans for the whole of 2023. Like, if you guided for that, then it would just be a cherry on top, but it's not like it's something else. What does make me a little worried is that maybe things are going bad and they need that loan revenue. And, that's why they're suing, because they got to get that back immediately. That might be a little bit of a concern. Like, they're taking dramatic steps because, other parts of the business might not be doing that well, which is that might be the case. And another thing is that, Sean brought up a good point yesterday of they might get sued by shareholders if they don't enact this lawsuit, which is reasonable, right? Like, because shareholders have a case, or even legal institutions institutional investors can make a case that if you did not do your fiduciary duty to try to get this money back by suing the Biden administration, then we're going to sue you because you did not do right by shareholders. So there's an argument there. Amit is a bit biased. He has a student loan. Well, see, I have a $10,000 student loan. Literally, it's $10,250. So if the Supreme Court goes Biden's way, my student loan is gone, so it wouldn't even affect me. But I don't think the Supreme Court is going to go my way. I think they're going to strike this down. So the thing is, SoFi is not suing to stop Biden from forgiving loans. That's not the argument. So it actually doesn't affect me. It's more so about them not delaying the extension of the loan pause. That is what SoFi is suing them about. And so regardless of if you have a loan or not, it's more about, do you want to pay it now or do you want to pay it later? And so I just thought it was a bad look. It didn't look a lot of sense to me. What I love is watching the Silicon Valley way of generating startups go down in flames. It is absurd the amount of money you need upfront to generate free cash flow 10 years later, maybe. Well, I agree. I also think, like, if those banks are really innovating, not those banks, those companies are innovating, like Facebook, like Tesla, then you have to burn a lot of money to get to like peak innovation. And then eventually in the public markets, you have positive free cash flow. But innovation's hard, right? There's a reason why the best tech companies in the world are in America. There are very few tech companies that are like really, really innovative and big and amazing that are outside of America. And if they're in China, they just copied everything from America, right? Microsoft, Google, Amazon, Facebook, Tesla, like these companies, they're in America. They start in America because America encourages a lot of failure. Like, one thing to understand about Silicon Valley Bank, the entire notion of Silicon Valley is deeply and intrinsically American, because in America, you are encouraged to start and you are encouraged to fail. That's one of the biggest reasons I'm a patriot in the United States, outside of freedom of expression and freedom of speech and all that stuff. The reason I love America is because you can fail and you're not exercised from society because you failed. You're encouraged to try again. And this is one of the only places in the world where that unique value lies. And so Silicon Valley is just an experiment over the past 40 years of, can we convince really rich people and banks and institutions like Harvard and Stanford and all this stuff to take their money and give it to a bunch of people that are probably going to burn 95% of it, but the 5% that doesn't burn will create transformational, revolutionary change in the global markets throughout the entire world. That is the experiment of Silicon Valley, and it's worked, because all of the biggest tech companies of the past decade that we've gotten have been venture funded. I mean, MailChimp is the only company I know that did not raise venture funding, and I think they started in India too. I might be wrong on where they started. Zoho Mail, I know, started in India. MailChimp might have started in Israel or America, one of those. But most tech companies, they need venture funding, and they need to take that risk. And so Silicon Valley Bank is a central part of helping all those startups take that risk. And so I don't like seeing it collapse. I find no joy in seeing a bank like this collapse, especially when I don't think they were engaging in fraud or anything like that. It is more detrimental to the startup community than not. These banks are gambling on cryptos and you're making excuses for them. So I don't think Silicon Valley Bank gambled on crypto. That's not what happened. They bought mortgage-backed securities. If a bank was buying, crypto and ETH and all that stuff, like, yeah, I don't have any sympathy for them, because I think those are too volatile assets. But they gambled on mortgage-backed securities, which is a bit different. Now, granted, I'm not making an excuse for them. I obviously they should be a lot more fiscally responsible, but it does suck to see a bank that is central to the American ideal of not of trying and failing and being encouraged to do that, which is the whole startup community failing. That's not a good thing to see. My take, they're confident the Supreme Court will overturn this, and SoFi wants to be compensated for the 30 to 30 million in profits they lost over time. Yeah, I guess probably. I mean, there's a world in which the Supreme Court might not overturn it as well because they're questioning the legality of even bringing it up. But more likely than not, the Supreme Court's gonna strike this down. At what price will you buy more Palantir? Well, I was buying Palantir this entire week at like 820, 815, 830. So I've been buying a ton of Palantir. So of course where is it at now? 7 what's it at? It's at 7. Where do we have 752? Yeah, I mean, look, I'll see how it goes over the next couple. I would like to buy it under 6, but we'll see if we can get there. That's going to be the big thing to see if we can actually get there and see if that happens. Will this be contagious? How many other banks are actually holding these hidden losses? It doesn't look like it's contagious. From all the research I've seen, it does not look like this is contagious at all. So I think we should be in a decent spot dealing with at least what I've seen. I don't think Bank of America or JP Morgan has it. Now, some of the smaller banks have this issue. Let's listen to FRC. FRC. There's another bank that I forgot the name of it, but that was down 20%. FRC is down 50%. FRC. Oh, wow. FRC just rebounded. It's up. It's down only 20%. Look at that. Look at that. It's right up. It's up 21 per. It's $75. Wow. That was a rebound. Let's go to SIVB. Yeah, that went up to 100. It was at 39 or maybe that already happened. It was at 39 pre-market and it's up at 100 now, but maybe that's because of the halt. Wow, interesting. Market recovered just a little bit just now. Let's listen to what Kramer has to say about the strong job report and some of his thoughts. Here we go.
As we mentioned, the February jobs number was 311. That was above expectations, but negative revisions on the prior 2 months. January's 517 goes back to 504. The real headline, Jim, is labor force 3-year high, basically back to pre-pandemic.
Right. And
the weakest month-on-month earnings print in terms of wages in almost a year.
I mean, again, like you said, totality. Does JPAD want to say, you know what, I've looked at the Silicon Valley Bank and I'm going to just go 25? No. But you look at this and you say, maybe it's starting to go in the right direction. We only need to go 25. January was a red hot month. February is a cooling month. The retailers that I talk to indicate to me that so far March, now we only have 10 days, but the end of February was a weaker month for this country. The beginning of February was strong. So I wish Jay had said, but when we look at the second half of February, there may be a little deceleration because I see it with all the companies I deal with.
2-year this morning, 472. This was 508 2 days ago.
Yeah, that's people going back and saying, you know what, I'm going to do okay in the 10. I think that the 2-year is saying 25. Wants to see CPI. But, when you deal with, say, the Walmarts and the Targets, none of them were crazy about how the last half of February was. I mean, it is a bit of a tale of two cities between months.
Kramer can barely talk. His voice is crackling. All this stuff. He's just like he's struggling to get it out there. Yeah, look, jobs report not the best. 311,000 jobs. I mean, that's great. Look, if you need a job in the United States, there's 10 million openings and there's 5 million people looking. So the job market is in people's favor, and probably at some decent wages. It's just a question of what does that mean for inflation now. So not quite too bad. What's going to happen with customers of SIVB? So I haven't heard any customers get screwed yet. Most customers have pulled out their money like yesterday. And so they put their money somewhere else, which means, obviously, they're okay. I don't think they've gotten, the bank has been run because people took out their money, but customers don't seem like they've lost any money yet, but I haven't even seen. I have almost tripled my entire portfolio in a matter of 3 days. And that's what you can do if you time the market and go short like Glitch Life did successfully. Now, it's not easy to do, but if you're able to do it, then you're able to make a crap ton of money. So shout out to you, Glitch Life. All right, that's it for me, guys. I'll probably make some videos a little bit later throughout the day talking about this. We have SoFi weekly tonight, Palantir weekly tonight. We'll be talking about this as well. SoFi, the implications for SoFi. It'll be on tonight. We'll be live. I might live stream a little bit more later throughout the day talking about this stuff. But this is big. This is big news. We'll see what happens. Ultimately, if you guys want to rewind, if you didn't watch the 20 minutes I had with Sachin, it does not seem like a Lehman or Enron moment. It does not seem like a 2008 crisis. It just seems like something bad that happened, but not necessarily a catalyst for the entire economy to crash. So we will see. All right, that's it for me. Thank you all 310 people for being here. Please follow me on Twitter. That's the only thing I ask. In the description, please give it a follow. Check out the market updates throughout the entire day. Appreciate you guys. I will see you later tonight. Bye, everybody.